What's also becoming very popular in the recent couple of years is the focus on environmental, social, and governance issues when you approach to analyze a stock. And the combination of analysis on environmental, social, and governance is called ESG for short. And since becoming very popular and highly requested, we began to show ESG-related rankings in our app in recent months. Scroll past the similar stocks and similar funds section, and you will see ESG as the top of the other factors section. Here is just a reminder to switch back and forth between the all view and the rankings only view. You can use the expand all and the collapse all function at the very top. When you click collapse all, you only see the rankings related information. And if you click expand all, you'll start to see the data that goes into ranking calculation. And here ESG is the main factor. Within the ESG main factor, we have 4 different components: environmental, social, governance, and lastly, reporting scope. And you can see the breakdown of the rankings for each of the sub-factor, and with each one of them contributing 1/4 of the weight to the final calculation. So here for Apple, you can see its total ESG rank is 596, which is a very good rank, almost in the top 5%. And you can also see the underlying raw data that goes into that calculation, which is based on a scale from 0 to 100. Apple has a score of 73.1. And you can also see the detailed sub-factor contributions. And the reason why this detailed sub-factor breakdown is important is because when you want to drill down to which of the factors contributing more and which of the sub-factors are lagging, you can see from this breakdown very clearly. So for example, for some stocks, they may have a very high headline ESG rank, but within that, if you care a lot about the governance and the stock happens to have a very low governance rank, that brings your attention to that. And you should, as a result, dig more and possibly say no to the company. And lastly, the reporting scope definition here is amongst all the issues the company needs to disclose regarding ESG. Some companies choose to disclose as much as they could, and some companies, on the opposite, choose to only disclose some partial information. So this reporting scope adjusts that amount of disclosure done by the company to avoid the company scoring very high by only disclosing information that is in their favor. And right after the ESG section, you also have a very important section called dividend strength. Now, especially for income investors who value a lot about dividends and the amount of income they can get from the companies over the long term, this is the section that you should pay a lot of attention to. And for Apple, as you can see, the dividend strength here is sound, ranking 1,559. And within that, you can see the 3 sub-factors contribution, from dividend growth to dividend yield and to finally dividend cover. The dividend growth basically just measures how much the company has been growing their dividends over the last couple of years, and in this case over the last 3 years, so that you have a pretty good medium-term track record. Dividend yield means the amount of dividend a company pays divided by its share price. The higher the yield, the better the rank is. And finally, dividend cover is about how much operating profits a company generates over to the amount of dividends they pay. So the higher the cover, the more likely in the future the company may increase their dividends. So as you can see here for Apple, its dividend growth is very high and the dividend cover is also very high, with however the dividend yield scoring in the middle. And up here you can see some of the data sets we use in our calculation so that you have a fuller picture. So for Apple, in the last 3 years on average, it's been growing its dividend by about 17%, 16.9 to be exact. And its dividend yield is middle-ish at 0.6%. However, here you can see its dividend cover, and here we define that as the amount of free cash flow the company has over the dividends it pays, and that ratio is almost at 700 times. So what that tells you is the amount of cash and the profits Apple generates is about 700 times the amount of the dividends Apple pays. What does that mean? It means Apple itself is actually able to increase its dividend amount if it wishes to do so. So that flexibility is very important when you analyze a company, because for some companies, even though they pay a lot of dividends, but they're really stretching themselves. Whereas for Apple here, there's ample room for Apple to increase the dividends. So all in all, as an income investor, when you look at these data, you will feel very comfortable holding on to Apple.